Let's have a look at Terry.
Okay, so Fundsmith, they reported that their fund size actually got to 22.1 billion, which was a lot bigger than I thought it was. I didn't realise Fundsmith had got so big. But the headlines here are that they've made big reductions in their payment firms. So they had PayPal Holdings, they had Paycom Software, and they also had Accounting Group into it. And they also made some reductions in cybersecurity firm Qualsys and engineering firm Ansys as well. So big move. He dumped over 4 million shares of PayPal. It was about 40% of his investment. He dumped about 675,000 shares of Intuit, which was about 30% of his investment in them. I'd estimate he was probably down 50% and 30% on those two positions. So it's a feral dump. He's trimmed Microsoft a little bit, but he actually bought shares of Apple, which was a company he previously said that he didn't really understand. He bought Otis, the lift maker, I guess is what we would call them, IDEX and Edwards Life Sciences, which I think are both sort of lab/life sciences companies off the top of my head. Most notably to me, he didn't add anything to Meta, which has dropped out of his top 10 positions, I would assume mainly because it's down 60% this year. He has added to Amazon, to Google and Adobe. These are all positions he bought earlier in the year. It's not a jumpy out kind of, not a lot of action here, Steve. Nothing really jumping out at me, but does the Meta thing surprise you?
It's not my intention to be deliberately obtuse when it comes to Terry Smith, but I often come off that kind of way. But the Meta thing, I don't want to say it's just because Meta's earnings have dipped and therefore returns on invested capital have dipped and therefore it doesn't look as nice when it comes to kind of looking at the numbers as they report themselves here, and you have to dig a little bit deeper. But when I look at the Fundsmith kind of annual presentation thing, and people call this the UK's Warren Buffett and so on, I tend to think to myself, it is very much about a pretty rigid approach of, look, I want this kind of returns on invested capital at this kind of price. So his plan is find great businesses, don't overpay, and then don't do anything. Meta no longer, I think, would come up in, I'm not saying he just uses a screener, but if you were screening now, Meta is reporting low earnings here. Earnings have been coming down, and it looks to me like with margins getting pinched, returns on invested capital are lower at Meta. Maybe that's why.
Yeah.
Focusing on, because I'm glad you brought up his 3-point strategy, focusing on the do nothing part of it. He's not doing nothing, is he? He's cut PayPal and the other one at ridiculous lows, kind of going against his own strategy here, and seems a bit odd. Terry Smith has become very, very popular over the past couple of years just because he's got great returns. And is that a case of the fact that he now, return on invested capital is the be-all, end-all way of discovering these amazing stocks that are going to outperform the market, or is he just got kind of lucky over the past couple of years and he's bought some of the top FANG stocks out there? It's odd, but that was the main thing that I picked up on in this AF, is that he's made sales and he's not supposed to, right?
Well, it's hard to deny he's been a good investor over the last couple of decades. There is a reason why he's pretty much regarded as the UK's best investor around at the moment, which probably to the ire of Mr. Ackman. But his holdings will probably surprise you. I would say they're not common stocks that you see in 13Fs. I don't think they're a mixture.
Boring,
and they are really, when you think about it. I mean, he's got 10% of his portfolio in Microsoft, 6.5% in Philip Morris, 6% in Estee Lauder, 5.98% in automatic data processing, and 5.6% in IDEX Labs. They're his top 5. They're all pretty boring companies. Maybe Microsoft has a little bit more excitement to it more recently. But Steve, do you have anything on any of them?
Couple of quick things. Yeah, but he sold part of his Microsoft, didn't he, this time? I thought that was one that I saw had been lowered
only trimmed.
Slightly.
Yeah, only trimmed.
Okay, only trimmed. You pointed out the thing about Apple, and he said he was a thing he didn't really understand. He's been brought round to some of those stocks recently. I saw he bought Amazon in the last year or so, having said previously that he took the view that he'd only be interested in AWS if it was spun out from the e-commerce arm. I'm not saying, by the way, that there's anything the matter with that at all. Anyone is allowed to kind of evolve their view of something and change their mind about something and realise that they've learned something they didn't previously learn. I think in many ways that's a sign of a good investor. If you think the same thing for the entirety of your life, that just shows that you never made any progress. So I don't mind at all the idea that Terry Smith has come round to Apple or Amazon or whatever. I'd hate, by the way, for anyone to hold me to the views I had, even sort of 12 months ago. I continue to try and learn stuff and build on that thought here. So I'm interested in the fact that he's kind of adding to Apple. I mean, it sort of looks like it's... I think someone's going to show that I'm wrong on this, but I have this idea that it's the FANG that's held up best over this year, which means that relative to its start of year price, it's the one that's the least cheap. And that seems to be a kind of unusual thing to be doing in that situation. But it's up to him what he does, I guess.
Well, he's long sort of compared them to Nokia, hasn't he? That was his prime argument, was that he likes companies that have loyal customers. So he likes to think that the companies that are in his portfolio, the customers to them are loyal. And his issue with Apple was always that, you know, everybody was loyal to Nokia until Apple came along. So who's to say that there won't be, you know, another company, the Solana phone, that comes along and takes away all of Apple's market share, just like it happened to Nokia. I think he must finally be able to see that Apple has created this ecosystem which almost has tendrils that traps you into it. The AirPods, you know, everything in the ecosystem is sort of revolving around the iPhone and iPad.
He likes switching costs, so that might have been something that's... He mentioned switching costs a lot when he talks about moats, so I think you might find that, yeah, he has sort of discovered that. On Steve's point there, it's only 4.5... Apple is only 4.53% down in the past year, and all of the other FANGs must be at least 30% down at this point. So there you go.
Switching costs and loyal customers and stuff. He owns Church and Dwight. Is it that hard to switch from Church and Dwight?
That's a different reasoning. He's got much more different reasoning for that, hasn't he? That's all about growing into emerging markets, I guess. But yeah, he has definitely mentioned the switching cost, and like you say, he's seen the moat there. I think he might have seen something like that in Facebook initially, but I think he was talking about return on invested capital for that bit as well. He sticks on this return on invested capital a lot, and I don't think it's wrong. You know, I think he's got proof, and he's got backdated proof of that being very positive. But yeah, he's learning and everything like that. I'm just looking at the do nothing bit, and I keep coming back to that. And he's done a lot, and it hasn't been very boring, this 13F. It's been quite active in both the selling and the buying. So I'm wondering how much we do stick to these rules. We talk about these rules that we all have, and how long do we stick to them, and should we just follow it blindly, I guess.
I've been terrible at doing nothing, for what it's worth. I set out the start of this year to try and do less, and I have basically failed. It's been a choppy year, right, which makes it really hard to just sort of sit there and do nothing rather than thinking, look at that thing go, I'm going to sell everything and buy that thing, quite a lot.